All right, what up? It's Ruben from TGE, and in today's video, I want to go over the most successful trading strategy that I use within the group to make this kind of returns of 73% return, and also how a lot of the members inside TGE Max and inside the Telegram group are able to get returns such as this, and this, and this, and this, and this. And I'm going to teach you what we do here in this video so you could do the same thing too and make a lot of money trading stocks and options, okay? And I'm going to give you a live example actually of a trade that we're currently in for Chipotle, CMG. All right, it's really, really simple. Okay, everything first before I get into the specifics of the trading strategy, I need you to understand something here. Okay, when when we go into a trade, we okay expectations. Really important to set expectations because this is part of the trading strategy that I teach inside my group. Everything is about setting realistic expectations. I know my win rate is low. A lot of the days throughout the week is usually flat, maybe small wins, small losses, but the win rate is pretty much about a 50%. I'm going to say 50 on a normal, normal month. Let's say month win rate month over month. Um, it's about a 45% on a bad month, and about a 60% on a good month. Okay. So with that being said, because the win rate is pretty much low, I would say 50% is even for me, that's a pretty high win rate. But if you take that into consideration, in my head, the way my strategy works is that we need to have a high risk, sorry, not high risk, good risk reward ratio, very high risk reward ratio. And so what that means is we call it RVR, risk versus reward. And by having high does not mean like, oh, it needs to be high risk. No, that's not what I mean by that. Is that I'm willing to risk about $1 to make three at a minimum. Okay, risk versus reward. Okay, and so when I go into a trade, I never expect to win. My expectation of winning is very low, just due to the strategy. It's just how it works. So I have very small losses, maybe flat trades, but when the winners win, they really win. And I'm going to show you exactly why I'm able to skyrocket for that exact reason, because of this right here, and because of just how the strategy works. I'm able to have a lot of like flat days like this, or maybe like this, and then boom, there's a winner out there. I'm going to show you one with CMG here, and it might look like this, and then boom, okay? Or it might look like this, and then boom. Sometimes there are red months, but it might look like this, and then we have another winner. Okay, so that's usually how it looks like on the P&L, all right? Now, what I'm going to show you is the strategy now, so you can apply the same thing too. Okay, I'm going to show you how we do it inside the group. So again, you could do the same thing. Okay, so let me show you CMG first, because every time I jump into a trade, you know, the first question that I ask myself is like, is the risk versus reward there? And in the case of CMG, it's really simple. I use TradingView to figure this out. I'm actually going to delete this line right here. I'm going to show you. We got in around a little bit under the $43. We got for some call options for some leaps. Actually, I don't even think it's a leap. It's like 7 months out. And so to figure out a good risk versus reward, it's really simple. You just open up this little forecasting tool, long position. And let's say I got in around here. I don't remember the exact time, but let's say my stop is this level right here, the low. Okay, that's perfectly fine. Now I have targets, right? My first target is going to be this 47.02, and I'm going to explain to you in this video exactly how I got these levels so you can get them too. You can already see here, if you look at the risk versus reward ratio, it's 11.06. That's very good, okay? If you see 1 or 2, if it's 2, okay, that's like, it's good, but you could do better, okay? If you see 1, that's bad because you need to have a higher win rate. the lower the risk reward ratio, the higher the win rate you have to be. And that puts more stress on you as a trader. And you want to avoid that. Okay, because trading is already a high stress, high performance job as it is. You don't want to make it high stress. So make sure that your trading strategy has these risk reward ratios that are so high that you don't have to worry about winning so much. The risk reward ratio that we use a lot of the time is usually 1 to 5, 1 to 11, like you see right now. And because of that, I can win like 33% of the time and still come out profitable. That's the beautiful part about the strategy that I use. And I'm going to teach it to you here. All right. So, first thing I ask myself, is the risk reward ratio there? Okay. So, first target is 11. That's a wonderful risk reward ratio. Next target is, you can see, 24. Okay. Now, how do I get these targets, right? Well, I'm going to show you here. Okay. So, I use a tool that I built personally. Okay. It's called Gextron. And all TG Max members have access to this. Okay, this is my tool that I use to figure out my entries, the support and resistance levels, and everything else. Like, are there unusual options coming in? What does the option tape look like? What does the equity tape look like? These are things that I'm always constantly monitoring as the days going by. Okay, and this is where my daily levels are. You can see here is a tab. And then I got a little tab here called price targets. Okay, really, really simple. And so the first thing I do is figure out the levels. That's easy. This is an easy part. This takes like 5 seconds to do, 10 seconds. It's by looking at the charts and just gotta look at this and say, okay, which ones are the tall bars? And this is based off the strikes from the option chain. So okay, 44, 42, and it doesn't matter if it's negative or positive. They just have to be tall, like relative to that stock, because it's going to be different for every security, right? Every security is different. They have different implied volatility, and so on and so on. So in this case, just by visually looking at it, you can see it's 44, 42, 40. That's the downside. And to the upside, we have 44 and 47.5 and then 50. Okay, that's awesome. So all you want to do is mark those levels. And you can see here that I did that already, right? 44. Let me see, what did I say here? I got to update that actually. So let's update this. So this used to be 43.50, but now it's updated. Now it's 44. So I got to update that. And that's the beautiful part about Gextron, okay? Because it's not static. It's never static. This is a dynamic application that's getting the option feed every minute of the hour, and it's constantly updating the levels. So it's projecting what the future high resistance areas or support areas are going to be. That's why that's why I love Gextron. Okay, it's dynamic. It's always looking into the future, and that's what we need as traders. Okay, so it's 44 now, right? So I updated that. And what's P-trans? So now the next thing I need to figure out is P-trans level. P-trans is just an acronym for positive transition. So we're going from a bearish sentiment into a bullish sentiment. Okay, and so at the moment, back then, earlier this morning, it was actually 43. But if you take a look at this now, it's 43.5. P-trans starts at the first strike that's positive, and the next three bars to the right have to be positive. So in this case, 1, 2, 3, perfect. So it starts right here, 43.5. It needs to have 4 consecutive positive bars, and that first positive bar is P-trans. But it used to be 43, now it's 43.5. What this tells me is that if we don't sustain this level where positive transition starts, this stock is no longer bullish at the moment. And so then my trade will get invalidated. And so as this data changes, I'm constantly reevaluating my trade, because the only time I change my thesis is when the data changes. And that data is called Gextron. And so if this was to be, 45 or 44.5, and we're under it, I had to now reconsider my trade and say, hey, I need to get out of this trade because we are not in a positive area of support or for this to have momentum to the upside. But right now you can see here it says call dominated because we are above P-trans. So that's wonderful, right? Now it's the opposite for a negative transition. Like if I want to be bearish on Chipotle, this would have to be 43 or under, right? Why 43? Because this is the first negative bar right here. You can see it here. Okay, first negative bar. and the next three bars to the left are negative. One, two, three, right? So N trans start here, 43, and it's just an acronym for negative transition. So that is again 44. Oh, sorry, 43. I have to update that line now. And definitely, if I'm long on Chipotle and the price action is below entrance level, then I have to like now really get out of it. There's really no saving this. This can go lower to the next area of support. Support and resistance really depends on the context of where price is. Like as of right now, we're going towards let's go into smaller time. We're going towards max reward here. The tallest positive bar here. That's what we call it here, max reward. And so this is the biggest level of resistance as of right now. So this could potentially reject, come back to P-trans, maybe go higher, or start making a new transition. So it's stuff that I have to constantly keep watching for, right? Now, if it goes above and this turns support and it goes to the next level of resistance is going to be 47.5, right? Like we just said, like just the way Gextron showed us. But if it was to come back to 44, it's no longer a level of resistance. We want to make sure that this is a level of support, right? So it really depends on the context of like, is it coming to this level or is it coming like below it, right? Is it above it or is it below it? And what's really important about this is that when I'm constantly monitoring this, like let's say it does go above 44, I want to make sure that the taller the bar, whether it's positive or negative, the bigger the resistance, the more liquidity, the more action, the bigger the resistance or support it's going to be, right? So it's really important to always analyze this. At least I have to analyze this all the time. Okay. Now, with that said, how do I set price targets? Because now I have a map. I know when it's going to be bullish. I know when I need to enter because we are above P-trans. I know the potential resistance levels that are coming up, right? But now I need to set realistic price targets by a specific expiration date, right? And so in this case, the way I like to do it is I like to do the quarterly targets and the year end of the year targets. Hence why I got a March contract that's already up about 6%. Okay. And so these contracts, the way I figure this out is I go to price targets here on Gextron, and then I look for the next expiration date, which it's going to be October 22nd. And so I have to look for an expiration date that is closest to the next earnings date, because that's a full quarterly cycle for that security. And you're not always going to have that week expiration because usually it takes a while as we get closer. But you can see here right now it's October 17th is the closest expiration for Chipotle. So all I do is I just copy this, really simple, and then I paste it in here. So it used to be 4702. Now it's telling me 48.27, and that's it. Like that's all I got to do. Okay. But I'm going to keep this level here as for now, because what I like to do is I like to grab it first thing after earnings or 2 days after earnings. And I don't want to let the data get skewed, right? Because as days goes by, as data kicks in, the data is going to get a little bit skewed. So I like to do this after earnings. So, which they had earnings just not too long ago. Okay, so my first target is 4702. That's how I get it. And this is all based on implied volatility. I just let Gextron say, here's the data, compute it, tell me what the price target is. Now, for the end of the year targets, is I like to get by January 2026, like the start of the next year. And as of right now, I could always do December, but I like doing January. I can always do. I just find the expiration for January, and I say, oh, okay, it's going to be 5186. When I first marked it, it was 5159, and so I just label this end of the year. EOY. EOY, just for end of the year. And now I know what to shoot for, right? So as I get closer to the quarterly, I'm going to sell majority of my position. At this point, these contracts will probably be about 50%. I got 50 to 50 strike, but these will be about 50%, and I will sell majority of my position here. And I will tell everybody in my group, hey, it's time to sell majority of this. And if once we hit our end of the year target, we'll sell the rest of it, which could be about anywhere between 100 to 300% return. And that's it. That is exactly why. Again, when it comes to figuring out, is this a good trade, you always got to ask yourself this question: is the risk versus reward there? Okay, if it's not there, if it's not even a three, forget about it. And yes, I'm swing trading. I'm not day trading this because I'm looking for an entire quarter cycle movement. So if it's not a minimum of three, and this applies also even if you're day trading, because I do the same thing for day trading, it has to be a minimum of three RVR. If it's not, forget it. If you have less than three, you have to have a higher win rate, like probably a 80% win rate. But that adds a lot of stress, and you have to constantly keep looking for tickers and keep doing like it's more work. And that's why, in my opinion, swing trading is the easiest. It's a little bit slower, but a lot of the trades that we take, they're leap trades. Like the expirations are more than 360 days and they come out at 100%. Like just a recent one was Apple, and we sold our leaps. What was it at 130% gains? So you can make a lot of money. And if anything else, the reason I like swing trades is because the deltas are higher, and the higher the deltas, the more money you make upfront. So it costs more, but you make more. And also, you don't have to worry about the clock, about theta eating up your contracts. Now, you could do the same thing for shares because we're doing it for Zeta, and Zeta is already up like crazy today. Let's see if that's still the case. Okay, we got in around this P trend level, just like I said. We were bouncing. You can see here, and so my end of the year target. This is where's my end of the year target? It's 27.49. This is a 10.89 risk reward ratio, which is fantastic, right? This puts it at a 50% gain and potentially lose about 4%. So we're making a lot of money on the way up and only losing a little bit, which is, again, this is what you can expect a lot of the time when you're trading like this. Flat, 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 slightly decline, and then boom. That's how, whoops, that's how a lot of this, let's go to Excel draw here. That's how a lot of this has been able to be. It's just because of this type of risk reward ratio setups that we find. And all of this is just figured out with Gextron, which is just my tool. And yes, I'm a little bit biased on it, and I think it's the best tool ever there because I built it and it actually makes us a lot of money. It's actually the main tool that one of the traders that I taught, he uses it all the time, and he's been able to grow his portfolio all the way to from 5.5K the start of April all the way to 100K and by the end of July. Okay, so that's the strategy. If you want to trade with me and my team, or you want to learn more about Gextron, join the free community. Send me a DM. If you want to trade with me and my team, then I'll put a link in the description. If you have any questions about Gextron or the setup or risk management or whatever, just drop them in the comments and I'll get back to you. All right, peace.